Is multifamily investing over? Are the Goldilocks days of everything being just right with interest rates and with great deals and cash flow over? And a lot of investors would say yes. A lot of people would say it's over. A lot of investors are giving pause now. We're seeing it in the amount of interest we're getting, particularly for multifamily deals. It has decreased a bit. And if you look at it on the surface, interest rates now, at least at the time of this video, 5.75 to 7.25% for bridge debt. It used to be a year ago, it was 2.75 to 3.25. So things have changed significantly. So is it over? Are we all done? I would say no. I think there's some incredible opportunity here. And I think it's really important to deep dive into what it actually looks like to be an investor in the multifamily space and also what's available right now. So let's jump in. All right, just a little reminder, I've got 3 awesome points here. I've got a great quote for you at the end, so stick around to the very end. I think you're going to enjoy it. Investor sentiment has changed. It's very clear that things were just go, 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 go. I know people that were raising millions and millions and millions of dollars, and probably about April, May, things started to slow down a little bit, at least on the side of raising money. And also what's happened is it's getting harder to raise funds because the confused mind, again, will say, no, I'm not sure what to do. And also we're having to raise more money because a lot of banks have changed the loan to value requirements from 20% down to sometimes 30 or 35% down. So it's getting harder on the side of those that are actually doing deals and are raising capital. But let's jump in here for a minute. You can see investor sentiment here is at a 35-year low. There's a lot of people that just are very cautious and very concerned. And I think it is important to know what's happening in the market. What are the opportunities? What should you do? I'm not telling you what you should do. I'm telling you what I'm doing. A lot of people are saying, hey, I'm just going to sit on cash. And the problem with sitting on cash, as we've talked about, is sitting on cash right now, if inflation is not 8%, if it's more like 15 to 18%, Shadow Stats basically says that it is. If you include energy and housing and food at kind of normal cost, it's around 15 to 18%. If that's the case, then by sitting on cash, you're losing about 35 to 40% of the purchasing power of your cash. So really it comes down to what are the best options out there, right? I think that multifamily is an incredible option, and I'm going to get into a couple of reasons why I think that is, but I think a lot of investors, just by sitting in cash, and if you're sitting in cash, I'd be careful how much cash you hold, because I don't know that things are going to drop in price or in valuation by 30 to 40% over the next couple of years. I could be wrong, but I think that by holding cash, we're in a different environment. We've talked about this on other videos. The Fed has created a phenomenal amount of currency over a 2-year period from February of 2020 to February of 2022, over 40% new currency, either physically or digitally created. So it's something that is really important to look at, but investor sentiment has changed. I'm going to jump into why I think multifamily is still an amazing opportunity right now. All right, so we're going to talk for a minute about higher interest rates and higher apartment valuations. Most people think interest rates go up and values for apartments will go down. Well, I'm going to make the case both for what's a negative attribute to values of apartments or multifamily and what's going to be a positive, what's going to increase the value. So one of these is going to be negative, so what's going to decrease, and which one of these is going to increase. So let's talk about this for a minute here. The negative things that are coming against, there's a lot of negatives, right? We've got higher interest rates. So we've got higher interest rates. So that's obviously the higher interest rates go, the less people can afford. So that's going to bring, costs down, or bring the valuations down, I should say, of apartments. You've got higher construction costs, right? So you got higher construction costs. That's obviously negative to valuation because the thing costs more. And also in addition to this, you've got labor costs. So labor costs such as staffing or property management, any of this stuff, it costs more. To do any of this stuff, it costs more money, right? So that leads, what does that lead to? Higher ownership cost. So again, it's just costing more to manage. It's costing more to own. So ownership cost is up. So that's more expensive. We talked about, the interest rates, that there's an expense. There's also an expense related to that, which is the interest rate caps. So most of us that are doing multifamily deals, there's one back here, I don't know if you can see that, but there's one kind of behind me, that basically we're using short-term bridge debt that's typically 2 to 5 years, right? And so there are caps on that to make sure the interest rate doesn't go higher, but those caps are getting more expensive. So interest caps are getting more expensive. So these are all things that are saying that the valuation of apartments should be going down. So a lot of these things, there's two sides where you have things that are inflationary, things that are deflationary. You've got things that cause apartment values to go down. You've got things that cause apartment values to go up. So let's take a look at this other side over here. And this is kind of interesting. So when we're looking at a positive value, or positive for valuations, right? So we've got higher rents, right? So rents are going up. Rents in Jacksonville, where we do deals, they've gone up 19% in the last 10 months, just in the market, not even any sort of value add thing like that, just what's going up as well. Another thing is there's less competition. So I put there's less competition, right? There's less people out there right now buying apartments. So it makes it more attractive to buy deals at a great price. So you're getting more income for what you're actually paying. So we're seeing that, which is amazing. We're also seeing incredible demand for housing. So we've seen this before. I've shared some of these stats, but it shows, we're way short on housing. Now it's somewhere between, 3.8 million or I guess around 3 million to 6.8 million, right? So whatever that is, my handwriting is amazing. I know you're just loving it. But whatever it is, we're short of housing. So this is basically something that's very positive for owning or being in the market to own apartments. And then another thing we do that we feel really helps protect things is really go for a value add approach. A value add approach, I think, is safer in this type of environment because if rents are $1,000, you can put $6,000 into a apartment renovation and see the rents go up to about $1,500 or $1,550. That's a huge upside that puts a lot of margin of safety there, right? As a term I love from Warren Buffett, talks about the margin of safety, making sure things are safe. So really, these are different things that are negative. These are positive. I'm gonna step over here so you can see this kind of the whole thing. But again, these are things that are causing valuations potentially to go down. But I think really this one right over here, this ownership cost right here, as ownership costs go up, I think what that's going to lead to is to higher rents. And again, these apartments are typically based on two things. One is the income that comes in, which is rents and other sort of things like that. Could be laundry or other sort of services, but mostly rents. And then also it's the value, it's how that is treated by the market, how much people are willing to pay for every dollar of rent. So on one hand, if values go down but rents keep going up, as long as rents keep holding where they're at or going up, and I honestly think with what's happening in single family, I mean, it's basically creating about a 40% higher payment. If you went from a 3% rate to a 7% rate, at least at the time of this video, we're almost at a 7%. The payment just for the escrow and the actual payment for the house has gone up about 40% in the last year. If that's the case, more people are going to need apartments. More people are going to need a place to stay, which again continues to drive rent. So I think as long as this number right here, rents are continuing to rise, ownership costs are going to rise, valuations for apartments are at least going to be stable. They're going to go up no matter what interest rates do, no matter what some of these other things do. So I think it's something to think about, and we're seeing this with sellers. Sometimes they're saying, hey, these things are performing really well. Why don't we just hold it longer because of the way things are performing? So I love apartments right now, but I want to talk to you about your plan to hedge inflation. Maybe you've got another plan, and I'd love to hear in the comments if you have a plan. But like I mentioned, inflation is high, 15 to 18%. If you're putting it in cash, even other people talk to me, I get opportunities to be a part of different deals as a passive investor or even as a general partner. I get a lot of people find, oh, we've got debt funds right now that are paying 8, 10, 12%. I don't like any of those debt funds. The reason why is it's paying below the rate of inflation. In my opinion, inflation is not 8, 9%. It's 15, 18%. So the only things that I see that actually that pay you to hold them and they actually truly hedge inflation is income property like multifamily, where there's a huge shortage. So I love, love, love it. Another option, we have our ATM machine fund that we've invested in over the years, and we've brought some of our investors to. We only have it open 2 or 3 times a year, but it's higher. The cash flow is actually higher than the rate of inflation, which we find absolutely awesome. So there's things like that. There's other alternative things like oil and gas, other assets. But again, you really want to try to find things you can invest in that have a hedge against inflation. And I can show you a chart that shows rent and inflation really go hand in hand, right? So this is a way that you can hedge inflation, you get paid to do it, and that's why I continue to love multifamily. So I do hope, friend, that you have a plan for inflation, that you're not just putting your head in the sand, you're not just putting in the bank, but you're telling even your friends and family members, hey, get into assets that pay you to hold them. Get into assets where as costs rise and the government prints more and more currency, right? That's currency and money, there is a difference, but they print more currency, that you have a plan to be able to safeguard yourself, that you'll be able to grow your wealth, you'll be able to get cash in the middle of that, and the valuation goes up. And again, what I love about multifamily is it's a leveraged asset, right? So you have 20, 30% down, and if it doesn't need if it goes up by 20 to 30% in the valuations, you haven't increased your equity by 20, 30%, you've doubled it, right? Because you only put 20 to 30% down in the first place. So the fact you can use leverage and do this even at 7.25% is still, I think, an amazing deal. So I want to share this quote with you from Ronald Reagan. He said this, inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. So I hope you have a plan for inflation. If you're interested to check out this video about your best inflation moves, check out this video here. I had an expert panel talking about this exact topic, about what you could and should be doing today to be able to educate yourself and make some good moves. And if you haven't joined our investor club, you're not hearing about our ATM fund, which is amazing. You're not hearing about our multifamily deals, which we're loving, and we're also getting into some other innovative spaces as well. So check that down in the comments below or go to bronsonequity.com. Thanks for taking the time to educate yourself, because it really is the best investment you can make. And we'll look forward to seeing you on the next video.